Look, the battle for the future of AGL Energy will go down to the wire. The vote to split the company is June 15. Now, it requires a majority of 75% of shares voted on the day to be in favour of the demerger. But Grok Ventures' Mike Cannon-Brookes already owns 11.3% of AGL shares and will vote against the split. Other investors are also saying no. The latest is super fund Hester, which owns around 0.36%. Chief Executive Debbie Blakely today said responsible investors have a responsibility to their members to go where the biggest emissions are, and as investors to try and change the behaviour of these companies. Well, another shareholder voting no is the WAM Strategic Value Fund. Its chairman is Geoff Wilson, and he joins me now. Geoff, many thanks for your time as always. Explain to me why you're voting no to this suggestion of splitting AGL in two.
Yeah. Well, we haven't said we'll vote no at this point in time. We said that we're seriously considering voting no, and we're looking at more from a financial perspective. Reading through the explanatory memorandum AGL put out, 384 odd pages, it just amazed me how much money this is going to cost. It's $260 million to do the transaction, and they're going to split one company into two, and it's going to cost shareholders or the owners of the company an extra $35 million net per annum. Now, plus there's hundreds of millions of tax losses that they're going to be lost. So to me, AGL might have been in a difficult position a number of months ago, when they were talking about this. But the dynamics have changed for the business. With the oil price up, their margins are improving significantly. So unfortunately, the board hasn't pivoted. So from a financial perspective, I know the Hester comment and Mike Cannon-Brookes' comments, they may be looking at it from a financial perspective and from a sort of with a green lens. We're looking at purely from a financial perspective. So we're seriously considering voting no.
But surely if you're looking at it from that financial perspective, then other shareholders who might not be looking at it through the green lens, they'll be doing exactly the same thing. They'll be coming to their own conclusions about whether they believe this adds value to the shareholders long term or whether it is actually destroying value for those shareholders.
100%. And to me, reading through the explanatory memorandum, I couldn't believe some of the money that's been spent. I'm chairman of a number of public companies, listed investment companies, and if we spent $100,000 too much, our shareholders would beat us over the head. Here you've got, I talked about the $260,000 that's going to be spent for the merger. Of that $260 million. Yes. Of that, $75 million has been paid to advisors. Now, I mean, Ross,
that's right.
Why didn't they pay us $37.5 million each to give them some advice?
That's a fairly decent drink on the way through. There's no doubt about that. It's so true. So, all right. So then, but tell me also about the whole notion of what it looks like afterwards. Mike Cannon-Brookes says it's going to have trouble raising capital in the future, to raise debt in the future because of the legacy of the coal-fired power station. Is that something that an investor now has to be conscious of?
Well, if they split it in two, because the fact is, you get both pieces as a shareholder. So it doesn't mean, are you in any better position? You get the two pieces. Currently you've got one share. You get two shares, one in each of the new entities. And that has cost $260 million. Plus your costs have gone up by $35 million a year. Plus you've lost hundreds of millions of tax losses. To me, it just doesn't make sense. And plus it's the diseconomies of... there's no economies of scale. You've lost those, in terms of working capital costs, in terms of potential funding. Well, funding costs. Yeah. They talk about funding costs going up by over 1% on the debt. So to me, with a pure financial lens, I just can't. I've got to be convinced that it's a good deal. And at this point in time, I'm not convinced.
OK, then can I get a final comment from you? Because I always get you on about the markets, right? Yeah. The markets right now clearly are highly volatile, wondering where is the bottom, where are interest rates going, where is this inflation story going? What's your own feeling on that?
Yeah, I'm nervous. We've had 10 or 20 years of falling interest rates, and now we've got a period of interest rates going up, and obviously there's an inverse relationship between values of companies and interest rates. So interest rates go up. Now, PE multiples come down. So I think it's going to be a pretty tough year if I had to guess, towards the end of the year I would say we're getting closer to a bottom. I just think it's going to be a tough 12 months. I'll
tell you what, it's always to get your perspective. We'll have a longer chat about that sometime in the very near future. Geoff Wilson, the Chairman of Wilson Asset Management, many thanks for your time as always.